Hello, my name is Abdul, a recent graduate of the Harvard Kennedy School and the Stanford Business School. Today, I want to talk to you about the perils of digital lending. You might be wondering, what is digital lending? It's kind of a new form of borrowing through one's phone, and it's leaving many in debt or excluded from further borrowing, especially in underprivileged communities around the world. Digital lending is different from your traditional lending where you go to the bank because it's loans that are instant. They usually take less than 72 hours to approve and disperse. They're automated using alternative data and algorithms to rate borrowers. This usually requires an understanding of borrowers' behaviors, who they interact with on social media, who they communicate with, their spending habits, and so on. And the third key point is that they're remote. They're accessible with minimal human interaction. You don't have to go to a bank. You simply just go to your phone, choose how much you want to borrow. The algorithm runs, tells you how much you're approved for, and instantly it ends up in your mobile money account. I recently actually did my thesis at the Kennedy School on digital lending in Kenya. A lot of these entities, the ones that I came across that were doing really well in Kenya and Tanzania, were actually foreign venture capitalist-backed fintech startups. In Kenya alone, over the last 3 to 4 years, there's been 50 or so entrants in this space. The narrative that's especially in the media is that they're targeting the sole proprietor who has a small shop that wakes up in the morning, needs $10, $20 in credit. They go buy the goods that they need for the day. They're able to sell it with a markup throughout the day. And at the end of the day, they pay back the loan, and voila, they've facilitated a means of livelihood for these individuals. But there's a dark underbelly to really what's going on with digital credit. And there are many people who are becoming hopelessly in debt and further excluded from the credit markets. When I saw this firsthand in Kenya, I was particularly concerned because the most vulnerable communities were actually impacted. They would become trapped and they would be borrowing from one app to pay back another app that they had borrowed from, caught in this cycle of perpetual lending and borrowing that they couldn't escape from. I remember reading a story about Samuel Ngari. He was a 25-year-old Kenyan who borrowed $30 through a mobile lending app. He faced difficulties repaying the loan and was bombarded by constant calls and text messages. Some digital lenders go as far as calling relatives and friends to obtain payment. So you really feel the harassment from some of these lenders. Not all of them are participating in this behavior, but this was becoming rampant over the past 2 years. Unfortunately, Samuel hanged himself in his family's home in June 2019. Relatives and neighbors think this harassment played a significant role. Many others, not just in Kenya, but across the developing world, are dealing with the stress and even depression related to these easily obtained loans. Over the last 3 years, in the situation of Kenya, 2.7 million people, or 10% of adults, were blacklisted, completely shut out from digital lending, and more broadly, even lending from banks. 400,000 of those borrowers who were blacklisted were for loans less than $2. Sometimes to even get your name off of the blacklist, you would have to pay the equivalent of $20, 10 times potentially what you borrowed to remove your name. Blacklistings are usually for legitimate reasons, but increasingly many Kenyans are finding themselves mistakenly blacklisted for loans they did not take. You might be wondering, hey Abdul, I'm all the way in Silicon Valley, I'm all the way in another part of the world, I'm not in East Africa, why should I really care about this? What I would say is you'd be surprised by the number of investors and venture capital firms, including even government institutions and development finance institutions, that have supported the digital lending space. I would encourage you to really follow this arena and see who might be investing in companies that are partaking in this rising challenge that many in emerging markets are facing. There's no real fortune at the base of the pyramid. There's got to be a moral concern around taking hard-earned money from people who are living on $2 a day to pay back LPs who are investing in venture capital funds in developed nations. A year ago, when this issue was really hot in Kenya, it was only the local newspapers that were covering this. So I understand that many people in Silicon Valley and other hubs of innovation are not as aware, but I think there is an onus on all of us to ensure that we know what we're contributing to, especially as we've seen major technology companies face significantly more scrutiny over the past 3 to 5 years. I think we can't just say that we're doing our job. I think there's an obligation to know what you are working towards and how it impacts the people who are using your services and your products.